US presidential election because the rhetoric is going to change. Whether or not the Republicans or Democrats win doesn't matter. I think that there's going to be a big push about affordability, about inflation, about we need to stop doing this money printing because it's harming the average person in the United States and around the world. And that's going to cause investors to question whether the authorities are really going to continue to just keep printing money. And that's going to cause a market correction.
There's a moment in every market cycle when the noise fades, the narratives crack, and only one thing matters. Who actually understands liquidity, the market is completely misreading the single most important macro shift of the decade. While most people are obsessing over charts corrections and short-term sentiment, Hayes is looking at the political and monetary landscape forming ahead of 2026. And what he sees is nothing less than a setup for the biggest crypto melt-up in history. Whether people are ready to accept it or not, the next US election cycle is about to redraw the liquidity map. Hayes argues that it doesn't matter who wins, Republican or Democrat. The political incentives are identical: affordability, inflation, voter pressure, and an economy that cannot function without engineered liquidity injections. And when those incentives collide with trillion-dollar deficits, collapsing real yields, and a global wave of coordinated money printing, he believes Bitcoin doesn't just grind higher. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
I think that we've just had a little bit of a pause. And for those of you who haven't traded crypto, I mean, I've been doing this for almost 15 years. What Bitcoin dropped? What, 15%, 20%? That's
35.
Not really 35. Okay, cool. Whatever. That's kind of like par for the course for a bear market from 125 to, what was it, 80,000 or whatever we dropped recently. That's just normal market behavior. I'm not particularly surprised that we had that sort of pullback.
On Twitter, on X, I saw you post, you believe 80K is the bottom, but you're not going to drop a bazooka load of new capital until the new year. So why not now if we just hit the bottom?
Because I'm going on vacation and I don't really care. I don't really want to think about my positions. So I have a few trips coming up and I don't really want to look at my phone. And so I'm not going to go maximum risk. They'll, just going to leave some stuff on the table and come back and take a look in January. So I wrote an essay about the 4-year cycle and I did a chart study. And I mean, every major crypto commentator has their own opinion on this. My opinion is that the 4-year cycle lined up with a 4-year credit cycle between the Fed in the United States and the People's Bank of China and China. And that sort of gave us this impression that there's this programmatic 4-year cycle when in reality it was just a credit cycle. And so we went from the money printing of the US and China after the global financial crisis in 2008, 2009, which led to 2013. Then we went into a second massive Chinese stimulus post GFC in 2015 when they reflated their housing market again. Then we went into the COVID era stimulus in 2021, led by the United States. The current bull market has basically been powered by the reverse repo program, which basically is this program that had about $2.5 trillion in it. And bad girl Yellen, the former U.S. Treasury Secretary, engineered a way to reduce that down to zero over for about 18 months, from about September 2023 until 2025. And that was basically the catalyst that launched every single risk asset, whether that's crypto, gold, stocks, housing, whatever you want to call it, from then until now. And now we're basically in this transition period where, Team Trump and his Republican Party are going to print a ton of money to try to win an election in 2026. And the rest of the world is also printing money as well, maybe not to the same extent in the United States. So again, I just read the newspaper. And the newspaper, the politicians tell me that they're going to fight people, they're going to drop bombs, they're going to build things. Very rarely do I hear about raising taxes on a general level, other than, we're going to tax the rich people, whatever that means in your political context. but everyone else is not going to, is going to get all these great goodies and they're not going to pay for it. And that's literally the message from every single politician all around the world. So it's show up at the polls and vote for me, or if you're not in a democratic society, please don't get angry. Support me as your strong person, as a leader. So I don't think that we are out of this money printing phase yet. And so yes, we've had this sort of pullback in Bitcoin because of a lull in money printing in the United States due to some technical factors, government shutdown, change of the guard at the Fed, those kind of things. But I think in 2026, we resume standard operating procedure, which is print money, and Bitcoin, crypto, stocks, real estate, everything keeps going up. I think that we are at the end of the beginning of this cycle, and the massive amounts of crazy bull market money printing is ahead of us. And what informs my opinion on that is the Republicans in the United States have an election to win in 2026. They got their ass kicked in a few specific elections this November in New York City, some other states, and the governor's races. And the message was affordability. The message was, where's my goodies? And so they've got to go back to the well and, print some money and hand it out, just like the Democrats are going to do in their cities and their states. And so it's all the same program, at least in the United States. It's printing money. In China, they're battling the deflating housing market. They're not going to go as crazy as they went in 2009 and 2015, but they are going to add stimulus to their economy to make sure that the housing collapse is managed appropriately. And at some point, we'll see maybe all the deflationary impact of AI in China prompts general angst, and they print money to mollify their population as well. Over in Japan, the new prime minister just launched one of the largest stimulus programs since Abenomics about a decade ago, however long he was in power. And so we have stimulation in Japan. In Europe, because they're afraid of Russia for some nonsensical reason, they're going to print a bunch of money to build up their military, and that is going to print money in Europe. So I think that the fireworks are just beginning in terms of what assets can do. And I think that the upside is under-owned by a lot of institutional investors. I think retail investors get it, right? They've been fucked so long by not owning enough financial assets. They're buying leverage ETFs. They're buying zero expiry options. They're trading crypto. They're trading meme stocks. They understand just go YOLO, and the money's going to get printed and it'll save us. Institutional investors are trying to be a little bit too cerebral about it, and which means they're under-owning the upside. Well, I think Bitcoin is forecasting a 20% or some sort of correction in the stock market. That was a move from 125 to 80. Bitcoin is the last free market smoke alarm of liquidity. And so we'll see if stocks catch up with Bitcoin, or if, starting in December when the Fed stops quantitative tightening and some other technical factors in the money markets, the stock market collapse that Bitcoin is sort of previewing happens or not. I mean, obviously, I think the number one thing is liquidity at the end of the day. That's all that matters from my perspective. If you get that right, then obviously you can come down into the, okay, well, other than Bitcoin, what other altcoins or shitcoins should I be trading? And that gets into sort of style and what narratives are popular in 2026. I happen to think that the privacy narrative will be a big one in 2026, and this is sort of foreshadowed by the rise of Zcash over the last 2 months. It's gone up, 10x or 10 to 20x, depending on when you got in, from $30 to like $600. Now it's around $500 a coin. But I think this is going to be the new narrative: zero knowledge proofs, privacy, quantum resistance. Whether or not these things are actual risks to the ecosystem is not the point. People are scared, and they're going to invest in things that they believe are going to ameliorate these risks.
Arthur Hayes begins by dismantling the idea that crypto is entering a bear market. For him, the recent 15 to 35% pullback isn't just normal. It's the exact kind of volatility that has defined every single Bitcoin cycle. What matters isn't the dip, but the liquidity conditions around it. Hayes argues that the sluggishness in price action has nothing to do with weakening demand or fading interest. Instead, he points to a temporary lull in us, liquidity caused by political gridlock, treasury constraints, and shifting Fed personnel. In his view, this pause is structural and temporary, and once it clears, the liquidity engines that have powered the entire bull market will restart stronger than before. He explains the October 10th crash not as certain evidence of price manipulation by Binance and others, but as an inevitable consequence of leveraged traders' misunderstanding of exchange mechanics, a small exploit in how collateral was marked, triggered cascading liquidations, wiped out market makers, and sent liquidity evaporating across altcoins.
October 10th was sort of this crash on Binance and some of the other centralized exchanges. It was a crash across the crypto ecosystem, started on Binance for some idiosyncratic reasons. I have there's a lot of conspiracy opinions at CZ, and there's this cabal of market makers, and they, came up with a secret scheme to fuck everybody over because the prices on Bitcoin and altcoins dropped so precipitously quickly. Leveraged positions upon leveraged positions in these protocols, those were also affected because the mark prices of the underlying collateral went down so quickly. They got impacted, so you saw a lot of these lending protocols suffer some catastrophic failures and went out of business. And so you had traders, over-leveraged traders go out of business. You had market-making firms who didn't understand how these things worked on the exchange. They suffered massive losses. And so you have this massive removal of liquidity from the crypto markets, and that obviously adversely affected a lot of altcoins. Was this some sort of secret, conspiracy by CZ and all these exchanges? No, this is just crypto traders being crypto traders and not reading the documents that explain exactly how this stuff worked.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.